Brace yourself for impact. Next week's stock picks could skyrocket to the upside. So buckle up. Let's see which one's going to explode going into next week. Let's go. Let's jump into today's stocks. We've got some really great wins, and we'll start with Anil stock. So this is KNSL, that's KNSL. And what was the story on Anil?
It's in the insurance business. I didn't know the stock. It just showed up on my screen, and it says very strong fundamentals and number 52, I believe, on the industry group, several percent to pivot, and something it's forming the right side of the base. And I
Yes, it is.
I love it because I know I at least have 12% before it breaks out, where it may have some hesitation right at that.
Here's a big question for you, and I get this question occasionally. The volume on this, its average daily volume is only 202,000 shares.
Yep.
Is that a concern to you?
Yes, that is a concern. I usually would like to have at least 250,000.
Okay.
This is a little low, but with the strong fundamentals, I picked it.
And here's a really great important lesson that I think everybody can learn is, okay, given that it's an exception to your rules, and that's fine, but do you adjust the rules like where you watch it extra closely because it is so lightly traded?
No, there comes my sell rules, and I'll put about 5% stop and then see whatever happens.
Anil and I have had a very good track record on the stocks that we've picked. And as we reveal the stocks, remember, the further we get down on the list, we put the best stocks at number 3 and number 4. My first pick for today is, I've been watching this one and just can't get into the darn thing yet, but I like Pinterest. Now, why do I like Pinterest? Because my wife likes Pinterest, I have to tell you. Pinterest has got a comp level of 99. Accumulation distribution of an A+. People are buying this, but it just hasn't launched back out yet. And up-down volume ratio of 1.6. And right now, what it's showing me is when we're driving in a horizontal flag like you see here, that is a very bullish type of a pattern. It's a stronger pattern than a down sloping flag, but I don't want to buy it where it's at unless it meets certain criteria. And that criteria happens to be, if I did buy it right now, how far am I away from the stop loss? And if I put my stop down here below the 50-day moving average, I'm looking at it and going, that's about 7% away. What would be a better entry place for this, I think, is wait for it to pull back and retest this little hammer right here. Let me blow this up just a little bit, shrink this down just a little bit. Wait till it comes back and test it in this wick, because it's tested over here several times and bounced back up. And so like I said, the lower risk trade is to wait for it to pull back into this area here, and it may blow on through that and take out the 50, but from there, I'm only 3.4% away from my potential stop loss. And so that is well within my rules. The other thing I can do on this is wait for it to get down to that area. And if you wanted to take a more conservative route on it, is wait for it to get down there and then wait for the reversal, then take the trade from there. That's another way of approaching this particular obstacle or that particular setup and then trade entry. So it's really good. Next is, I just love saying this name, DDOG is Anil's next pick.
And that's in the computer software business. Again, very strong fundamentals. And this one on the MarketSmith chart, I believe, has a double bottom breakout.
Okay.
And I also have a triple screen signal a while ago.
Okay.
So I like it, and that's the reason I picked it. Its fundamentals are very strong with comp 99, SMR rating of A, accumulation distribution B, and up down 2.2.
So are you buying it right here, Anil, or Or are you going to let it pull back just a little bit?
Maybe just, I'm going to watch.
Yeah, because we had a breakout right there. But yeah, here's those of you who aren't familiar with, here's what I'm seeing as the double bottom. Now, the IBD double bottoms are a little bit different than a traditional technical double bottom. But anyway, it's basically you can see on the weekly chart, and we pulled down, came back up, and now we've broken out. And then once it breaks out above that level right there, that's considered one of the entries. Another entry, if you want to do an earlier entry on the double bottom, alternative entries, and I know you know this, is here was another entry, potential entry down here as it broke back up. But when did it do that breakout? Right at earnings. And so if you're a premium member, I'm gonna be talking a little bit about some of these alternative entries and also alternative exits that you could be looking at because of one of the trades that we did this week. Just it went the wrong way, and so we're gonna take care of addressing that. So that's what we've got for DDOG. What's next, folks? I'm glad you asked. Because what's next is our face-to-face segment, and we've got one heck of a great question today. Today, Anil, we are going to bust a big myth. What was one of the myths you used to believe about trading that has proven to be false? Today's myth that we're going to bust is more trades equal more profit. Is it a reliable strategy, or is it a road to risk and breaking the bank? Anil, what are your thoughts about, is more trades equal more profits?
Not really. Where I have boiled it all down to is the betting average and reward to risk ratio. A close watch on that will take us to the next level we go.
Okay.
If you just simply go on the more trades but not pay attention to those two metrics, you're in heap of trouble.
Okay. Did you ever fall for this myth that if I'll just trade more, I know my luck has to turn around?
Not on that one, but what I did fall on, I remember many years ago that I got to increase my trading account, to be more profitable. But that was
Oh,
a myth.
so what I find is like this, along with a lot of other myths, that what I find is that they are things we hang our hat on so that we can ignore trying to improve as a trader. You know what I'm saying? So in other words, if I only trade more, of course, I'll have to be more profitable. But the thing about it is, trading the little bit that a person's trading, I know this speaking for myself, I wasn't profitable doing that. So the rub in the whole thing is to trade smaller, learn how to become profitable and repeatable, and understand that if you can get to the place where you're trading, where you're winning 60 to 65% of your trades, and you're carrying a 2-to-1 risk reward ratio or profit loss ratio, guess what? You're going to have an edge, and you're going to be able to basically be profitable with your trading system. So if you're finding today's session valuable and you're ready to take charge of your trading journey, hit the subscribe button below, turn on the notifications so that you get notified over on the YouTube channel. I encourage you to join our community of traders. I love the family we've been developing, and we'll basically help you pave the path to financial and lifestyle freedom, because I know you have got what it takes. My next one, and I've got a toss up here. And so I was first looking at SQQQ, but I'm going to go with LABD. Now, LABD is the inverse leverage ETF of XBI, the biotechs. Now, why I'm going to do that? Now, I'm not going to short this where it's at. It's got to show me that it's going to fail here. Why am I interested in this? As I said earlier, my market forecast has dropped below the 80 line. We have pulled back down below the 20-day moving average. I'll be looking for a cross of the 20 and the 8, and I have bearish reversal signals over here on the weekly charts, with the TSI looking like it's going to roll over, and also the market forecast looking like it's going to roll over. It has not dropped below the 80 line yet, so I have time to wait on this. but I want to see what it does when it tests back up in that area there. If it bounces back up, rally attempt fails, then with that, I want to be shifting and trading. And LABD is the leveraged inverse ETF of the XBI. So what would that look like on this chart? On this chart, for it to pull back into that area, it would look like this. It would look like a pullback in back here to retest these past lows, let's say about $8.66. With the flakiness that's been going on in the market over the last several weeks, I am not going to try to fade this trade. I will wait until I get a pullback and a reversal. But look what's going on. I've got very positive indication. My market forecast on the daily chart is crossing up. My TSI on the daily chart is already crossed up. But look how sweet that looks over here on the weekly chart. We had a two-line cluster 3 weeks ago here, and then we're getting a reversal back up. Again, if this continues to work its way back up, I would be interested in a particular trade, especially if it dropped down to about there. And that about there equals, I'll put an alert on this, about $8.90. And again, I'm not going to take action on it until I actually get a confirmed reversal. I'm not going to try to fade this particular stock. So what do you think about this one, Anil?
Looking on the screen, and the MACD has reversed on the daily chart, showing the uptrend.
Okay.
8 and 20 still has not crossed. So if I'm buying it, I would probably wait until it crosses up.
Okay. Yeah, I think we're getting to the stage of the market where waiting for confirmation is not a bad thing. Those are some great stocks. And I love this quote by Mark Benevini because it says the key to success in the market is to have a plan and stick to it. Even when it's uncomfortable, it's the trader who can manage their emotions and stay disciplined that come out on top. And I was just looking through the ancient script a little bit earlier on, and there it talks about where there is no vision, the people perish. Another translation of that is that where there is no vision, the people are out of control. And if you're out of control, what does that mean? It means you don't have discipline that Mark Benevini is talking about right here. I want to highlight the Precision Entry Point routine course. It's over on our training website. I put this training course together because it demonstrates 3 strong strategic trading signals that when they're combined, they can improve your results. I'll put a link for this down in the description so you can get on board with that. And it comes with about $400 worth of additional videos that will teach you how to trade candlesticks. If you found value from today's session and you're ready to revolutionize your trading in 2024, join us every Friday. Remember, you are in control of your own journey, and we're here to guide and help with every step of the way. So trade smart, stay focused, and make 2024 your year of trading triumph. Just a reminder that all materials we do present are for training purposes. Traders should always paper trade any new method prior to the risk of their own personal capital. Past performance is not an indication or a promise of future performance.